Hi, this is Lara at Elliott Wave Gold with an extra video update for you with some US oil analysis in the early hours for the market session dated 13th of September. The bigger picture for oil is still bearish. The target remains the same at 34.34. The invalidation point are moving down now to 49.42. Let's have a look at the Elliott wave count first, and then we'll look at some classic analysis and see if there is any support and how much support there is for this wave count. The Elliott wave count sees a trend change here. There was a very obvious trend change, and it's seeing this new bear market unfolding as a zigzag, subdividing 5, 3, 5 for a super cycle second wave correction. It would be possible to try and see it over here, but you would be trying to see cycle wave C, a complete 5-wave structure from this high to this low, and as you can see, the second wave would be grossly disproportionate to what would be the fourth wave, which you could either see in here or in here. That gross disproportion does not give the wave count what we call the right look. It's the proportion between the second and fourth wave corrections of the same degree which give a wave count the right look. Here we've got intermediate waves 2 and 4 reasonably in proportion, and they've got perfect alternation, giving the wave count the right look. And so here we've got primary wave 4. It is actually quicker than primary wave 2, but it has a good proportion at the monthly chart level. There is some alternation between them. They're both zigzags, or of the zigzag family, but primary 2 is a single zigzag, where primary 4 is a double zigzag. Within primary 2, the sideways movement of this triangle for the B wave gives the whole thing a bit of a sideways movement, whereas this double zigzag has a steeper, sharper slope, so they'd look reasonably different. So there's some reasonable alternation there. Alternation is a guideline, not a rule. The target assumes the most common ratio to exhibit between primary 5 and 1 of equality of 15.38. If primary 4 were to continue any further, it can't move into wave 1 price territory above 74.96. This channel is really important, and this is where recent movement for the last 3 months continues to find strong resistance. I'm drawing my monthly, weekly and daily charts all on semi-log scales, and the trend channel's drawn from this low here to this low, with a parallel copy sitting up on these two highs. When you extend that on out, it's beautifully showing where recent upward movement is finding good resistance. Let's take a look at that now at the weekly chart level, where the high I've labelled primary 4 is this point out here. If primary 5 is beginning, it looks like we've got a leading expanding diagonal for intermediate wave 1, followed by a quick sharp deep zigzag for intermediate 2, and now with an intermediate 3, another 1, 2, and now we've got some more first and second waves up here. I'm just going to quickly go back to that monthly chart because this is something that oil and other commodities do quite typically. When they start an impulse, they often start with lots of choppy overlapping movement. They start quite slowly. Up in here you have another couple of 1, 2 first wave corrections, and these here are really time consuming. If you cover all of this of what happened after here to the right over, and you try and figure out what's going to happen next, Elliott wave here is going to be one of your best tools to try to figure out what's happening next. The fact that primary 2 did not make a new high beyond the start of 1, so the wave count to this point remains valid. That this will subdivide as a 5, and this is quite different. It's choppy, overlapping corrective movement. That this here will also subdivide as a 5, and the intermediate 2 did not make a new high beyond the start of intermediate wave 1. All of that means that the Elliott wave count to this point has a couple of big overlapping first and second waves, and when it does that, it tells us to expect a strong increase in momentum. Now that doesn't happen immediately. These 2 months here were quite small range months. Again, you could have been fooled into thinking that we could possibly have had an upward breakout, which is entirely possible, but this Elliott wave count would have warned to look out for some very strong movement ahead. I did have an Elliott wave count way back here which did expect some downward movement and did have rather low targets, for which a few people had some rather unpleasant words to say, but that's okay. I just had a little dig around in the Elliott wave gold archives, and I found this chart that was published back in July 2014. I've since changed the labelling of where I've seen cycle B complete. I'm now seeing it over here in 1, 2 for primary 1 and 2 within cycle C. But either way, I'm still seeing a 5-3-5 zigzag unfolding for supercycle wave 2, and I was still expecting some quite strong downward movement. And back here I had a 1-2 labelled at lower degrees, and I was expecting quite a strong increase in downward momentum over coming months. And so when we look back in the archives, this wave count so far, with some adjustments now, has worked out pretty well. The overall expected direction has certainly been borne out. So I'm expecting a similar situation here, some choppy overlapping movement, but we've had a series of lower lows and lower highs. Let's have a look again at how that looks at the weekly chart level. The primary 4 is up here, so we've had lower lows and we've had lower highs so far. So overall, so far for this year, oil is still in a downtrend. The bounces have been very deep and very time consuming, but we do have the definition of a downward trend with lower lows and lower highs. And so now for this wave count, we have a series of 1, 2, and now some more in here, at least 2 overlapping first and second waves. So we should be winding up and building up some potential energy, which may be released in explosive downward movement once we start to move toward the middle of these third waves. Let's take a look at what may be happening after the end of minor wave 2 from this high up here, this point up here. So now within minor wave 3 we may have another 1, 2, 3 overlapping first and second waves. So we really should be starting to build up some quite strong energy toward the downside, and that's why I'm expecting some strong increase in downward momentum over the next few weeks. After minor wave 2 here, we had an impulse for minute 1, a zigzag probably for minute wave 2 here with a complicated B wave within it, an impulse now here for minuet wave 1, which subdivides perfectly and has good alternation between the flat of subminuet 2 and a little zigzag of subminuet 4. And now we have a deep expanded flat correction for minuet 2. They subdivide 3, 3, 5, and they are really common structures. Within this one, subminuet B is a 1.39 length of subminuet wave A. The normal range for B waves within flats is from 1 to 1.38, so this is only ever so slightly beyond the most common range, so that's entirely acceptable. It's actually a really common structure. And the C wave moves substantially beyond the end of the A wave, and it has a 1.618 Fibonacci ratio to subminuet A, and that's most common when you have this length of B wave within an expanded flat. This is a really common structure. When expanded flats unfold like this, they can be really difficult to pick. The B waves make you convinced that you're going to continue in that direction right before the C wave moves beyond the end of the A wave, which will fool a lot into thinking that because we've got a new swing high, therefore we're going to keep going up. But the key is in figuring out, does the B wave subdivide as a 3 in terms of Elliott wave, and then looking at the strength or weakness within this movement. If it shows some divergence between price and indicators, and if it shows some weakness, particularly weakness in terms of volume, then it may be a B wave. B waves should be weak, they're suckers, and they shouldn't look like good, normal, strong trending movements. If minuet 2's over here, then we should now be beginning to see price move closer toward the middle of a third wave now at 1, 2, 3, 4, 5 degrees toward the downside. Subminuet 2 may not move beyond the start of 1 above 49.42. While we've been having a series of lower lows and lower highs this year, price each time it gets close to this maroon trend line, it's not even actually touching it when we zoom right down to the daily chart, and it's reacting really strongly close to that line. This is my bottom line for my wave count. If price does get again close to this trend line and again reacts strongly down, every time that happens, resistance at that line is strengthened, and I will have confidence in this wave count. However, if price gets up to this trend line and breaks above it, then I'm going to be quite concerned that there may be something wrong with the wave count, and I'll go right back to the monthly chart level and consider that the whole of primary 4 might not be over. But while that line continues to hold and its resistance is strengthened each time price tests it, this will be the preferred, most logical wave count. Let's have a look at some classic analysis now and see if there's much support for that idea. So price has been outlining a series of lower lows and lower highs since January of this year. More recently, price has entered a congestion zone around here. It looks like we're in a consolidation with resistance about 50.45 and support about 46.5 to a little bit lower, about 45.5, somewhere in this $1 range. And so while price is swinging from resistance support to support and back again, we can use stochastics to tell us when one swing may end and the next may begin. So here we had the end of an upward swing and a downward swing until price found support down here, and then a next upward swing. Stochastics has reached overbought. Price is at this other previous line of resistance, so it might be about to end here about 49.37. because stochastics has reached into overbought. But here's the problem with the swing trading approach like that. Consolidations are very, very difficult to trade. It's much, much easier to try and find a trend and join it. But when price is chopping between resistance and support like this, it doesn't move in straight lines, and resistance or support can be overshot before price turns. So trying to pick your entry point and set your stop appropriately, not to be taken out by a whipsaws, only to see price turn around and move in your direction, is really, really tricky. Trading price using a swing trading system and trading a consolidation like this is usually characterized by a few large losses and quite a few small profits. Hopefully the profits outweigh the losses. That's the general idea. But it really should be used only by experienced traders only. The rest of us should try and find a trend and join a trend. You're much more likely to be profitable. Here, it's entirely possible that stochastics could turn back up into resistance like it did here, into overbought like it did these times, or it did into oversold here and here. It certainly could turn up again, and price could swing a little bit higher to find resistance at the next line of resistance up here. I get these horizontal lines on my charts by zooming way out and looking left and drawing lines across as many major swing highs and swing lows as I can, and you will expect those areas of prior resistance and support may very well do offer resistance and support again. And here's another trick trying to figure out what direction price is going to break out. We can look at which days during this consolidation zone have strongest volume, and it's this downward day which quite clearly has strongest volume. That tells us that a downward breakout may be more likely than upward. Now that trick doesn't always work, but it works more often than it fails, so it's another piece of information that tells us that the Elliott wave count has a reasonable probability. For the last two sessions, price is rising, volume is light and declining. The rise in price is not supported by volume, and so it should be approached with suspicion. For the very, very short term, I would not be entering short here. I'd be waiting for some kind of candlestick to tell me it's a safer bet, because at this time I can see these two long lower wicks. That looks a little bit bullish. We most certainly could see another 1, 2 or even 3 upward days before we get an end to this little bounce here. I would be looking for resistance back up here or fairly close to it. ADX is declining. The positive and negative DX lines are whipsawing about each other. It's very obvious that price is consolidating. That's what ADX is telling us. There is not a clear trend in this market at this time. That's supported by flat and low ATR and contracting Bollinger Bands, all typical of a consolidation. At this stage, on-balance volume is getting pretty close to this resistance line. This has only been tested 3 times before, so it does not offer very strong technical significance, but it's reasonable. It doesn't have too steep a slope. It's not very long held, but it's not too short either. And so I would look out for, there's a little bit of room there for just a little bit more upward movement. I'd look out for on-balance volume possibly to help to halt the rise in price right here. And so we may be about to see a turn and some downward movement from price. RSI is neutral, so there's plenty of room for price to rise or fall. Stochastics looks like it might be returning from overbought, but as I've said, it can dip back up there and price can move higher before we have the end of the upward swing. That's all from me with your US oil analysis, and I hope that all our Elliott Wave Gold members are having a fantastic day.